If I could only trade one setup for the rest of my life, this would be it. In this video, I'm going to show you the exact model that helped me turn $5,000 into almost $75,000 in under 6 months. Let's get into it. All right, y'all. So this is a model that I have coined the champagne model. I developed this model using my 8 years of trading retail experience and also ICT's concepts. And using his strategies combined with my market knowledge, I was able to develop a model that I can consistently rinse and repeat that gives me a high win rate and high RR. So the champagne model is a form of ICT's market maker model, but it combines the market maker model with the daily candle power of 3. So you got your daily bias on one end, and then you have your time frame correlated market maker model on this end. And when you combine them, the stars will align to give you that high win rate with that high risk to reward. So with this example that we're looking at on the screen, we're actually looking at a bullish champagne model. So the first things first, we want to ask ourselves a few questions. We want to ask ourselves, where is price delivering from? Where is it trying to go? And where is it at right now? Those 3 questions alone will help you develop a daily bias. If you're looking to trade a bullish daily candle, well, you want to see it open up at 12 a.m., go down maybe in London or pre-market New York, recover that swing, and then distribute higher, and then it'll close in a small retracement. Vice versa, if you were trading a bearish daily candle, you would look for it to open up at 12 a.m., go higher, recover that move, and then distribute lower. So in this example, we're looking at a bullish example. We want to wait for price to tap into a higher time frame point of interest, a higher time frame key level. Let's say it's a 4-hour fair value gap or order block, can be either one. And we're going to be looking for IRL to ERL. So IRL is going to be internal range liquidity, and then ERL is going to be external range liquidity. So once we tap into this higher time frame point of interest, we want to look to the left and see, do we have untapped stop losses on the way down to that higher time frame point of interest? If so, then we are probably in a market maker model and we're looking to smart money reverse. Now the confirmation will be you going on a correlating time frame depending on which higher time frame key level you're at, and then you look for that time frame to tell you the same thing that this time frame is telling you. So let's say this was a 4-hour level. That means I would go to the 15-minute time frame and I would look for a fractal model. I would look for the 15-minute chart to be telling me the same thing that this 4-hour chart is telling me. So once I see that, I would then go to the 1-minute time frame, which would be the entry time frame for the 4-hour and 15-minute sequence. And then I will look for some type of displacement up and then a return to a fair value gap or order block, giving you the same internal range liquidity to external range liquidity setup. And once you get in, you can put your stop loss underneath the swings or underneath the higher time frame point of interest if it's not too big of a RR. And then you want to look to enter at a macro. I trade the New York AM session, so the macros that I would trade for indices are going to be after the 9:30 open, which would be the 9:50 macro, the 10:50 macro, or the 11:50 macro. That's 3 opportunities you have to make money, and you can even trade really any time between 10 to 11 Eastern Standard Time, because that's a silver bullet, and sometimes that will give you the same amount of volume that will push your trade towards a drawn liquidity. So let's just see what this looks like. And then also you can use added confluences like SMT. Let's say you're trading NQ and ES makes a lower low here, but NQ doesn't. And that'll be the market tipping its hand, showing you what direction it wants to go in. You can also use things like standard deviation, use the fib to align with your targets. And the more confluences you have, the better. That's just going to be what I like to call the stars aligning to help you get a profitable trade. All right, so we can see that using this indicator called the ICT everything indicator, we have everything that we need to kind of predict the daily candle. We have the London session, which is this gray area. We have the New York AM session, which is this blue area. We have the New York PM session here, the Asian session here, and then the white area is pre-market, and then this is the lunch session. So all of these sessions combined will make up the daily candle. So right here, we see that we have the 12 a.m. open. Price heads up a little bit and then it takes a dip down, making all of the sellers think we're just gonna melt. And then its smart money reverses up and then distributes higher for the rest of the day and closes in a smart retracement. So we can see that we have a very clean daily bullish candle. So now let's see how we can tie in the market maker model to this daily candle power of 3, giving us a complete champagne model. So again, we got to ask ourselves those 3 questions. Where is price delivering from? Price took off here. So it's smart money reverse here in this area. So what we would have to do is we would have to look left to see what it reversed off of. So let's go on to the 4-hour time frame so we can see what it reversed off of. All right, so here we are on a 4-hour chart and we can see that we have this 4-hour order block resting right here. These down close consecutive candles followed by a break in structure here gives us a bullish order block. Now, because we're on the 4-hour chart, we have to go to the 15-minute chart to see if we can see the same thing. And we see that this is the 4-hour order block right here, this blue line. We can see that price is clearly heading bullish, telling us the same thing that the 4-hour chart is telling us, which is bullish order flow. Underneath this blue line, we simply just want to look for bullish PD arrays that are holding. Okay, we see that we have a bullish fair value gap right here on the 15-minute chart. So at this 15-minute key level, we want to go inside of it to see the 1 minute to see if there was an opportunity for entry once price tapped into this 15-minute gap. All right, so here we are on the 1 minute chart and we can see that we have this 15-minute fair value gap here. We're still within the 4-hour order block, so everything is aligning. Now we want to wait for a macro to get an entry. All right, so the macro is at 950. You can trade, me personally, I would trade up to like 5 to 10 minutes before macro and like 5 to 10 minutes after, because price is not perfect, so you shouldn't be perfect either. All right, so if I'm looking at 950, I see a few different entries I could have. For one, we have an inversion fair value gap right here that we could have entered off of here. Once it broke through it, because I'm anticipating for price to go long, I'm looking at this bearish fair value gap and I'm expecting it to get disrespected. It actually does get disrespected here. So if you wanted to enter long right there at 953, you could. If you wanted to wait for price to come back to this fair value gap right here, that's probably the best entry. It happens right at, what time is this? 9:59. So it's still within that macro window. You can enter right here off of this fair value gap. You could put your stop loss right underneath here, safety first. You can actually put it a little bit tighter if you want. I would say probably like right there. And then you can see that price just takes off from there. Even if you were to have your stop loss here for safety first, the RR is still very amazing when it comes to trading like this, because all of the stars align and because you have that higher time frame backing the momentum for your trade. You can enter on these lower time frames, have a smaller stop loss, and still have a bigger reward. And when you add in the other confluences, like let's say you have like a SMT here, it just makes your trade so much better. So yeah, this is just a quick example of my model. If you want to learn more about this model and how I'm able to execute this on a daily basis, click the link in my description to join my mentorship. I have over 100 hours worth of classes that will teach you exactly how I trade. I'm fully transparent with everything I do so that you can learn from my mistakes and you can benefit from my good habits in the market. Psychology calls, teaching you to have the right mindset when you're trading so that you can perform at the best of your ability. Or if you just want to trade with a community of like-minded traders, you can join my group. Hopefully you guys were able to get some value from this video. Till the next one, out.